Chicago Quantum's top dividend stock service. We provide this data on our website, and it comes as part of our runs. So there's 5 attributes to a top dividend stock. It has to be a U.S. listed stock, also with a U.S. headquarters. It has to trade every day, and it has to pass our extensive data validation. It has to be profitable with a net income greater than 0. Its efficiency score, or Chicago Quantum net score, must be better than the S&P 500 index ETF score. This says that it's better to hold this stock than just buying the S&P 500. And then finally, the dividends paid must be greater than the dividend paid by the S&P 500 index ETF. And below is listed on our website a list of U.S. common stocks based on their actual payout or average share price over the past year. Now, it's an actual historical dividend yield for the owner of a stock every day for the past year. It is not forward-looking like you often see in a stock table. And so here's the data. If you were to buy a run, you would get this every day, and you'd get it before the market opens. And so this is through December 30th. The top 5 stocks, the top dividend stocks that meet our criteria are Blackstone, Microchip Technology. So Blackstone paid a 4.8% dividend last year. Microchip 1.7%. The Carlyle Group paid 3.3%. T. Rowe Price paid 4.6%. And Skyworks Solutions, Inc. paid 2.2%. Now, we talk a lot about it, right? Our list of dividend-paying stocks which have risk-return profiles better than the S&P 500 is limited, so do due diligence. And then we talk a little bit about different kinds of stock stories. So the best stock is one that pays a consistent dividend that's a sustainable percentage of profits and key free cash flow, such as 20 to 50% of free cash flow. As a company grows profits, it can afford to grow dividends. As it loses profitability, it loses its ability to pay dividends. We see evidence of this. So there's also just a significant number of companies that paid 7% or more in actual dividend yield over the past year. Only a few of them were money-losing companies, and that number keeps shrinking. So these tend to be profitable companies. There's also some exceptions to the sustained dividend story above. Some companies pay a one-time dividend. They do that to return cash to shareholders. It could be due to a windfall profit. Think of it like winning a lawsuit. Or restructuring their business, such as selling or spinning out a business. And these are the listed ones. So the way we do it is, it's over the past year, and a value of 1.1, let's say, or 1.10, means a company paid 10% of dividend. So you can see the stocks. Dorian paid 40% dividend last year. Albertsons, the grocery store, 34% dividends last year. European Wax Center. I just saw one of those recently in, I think it's Deerfield, Illinois. It was interesting to see one of those stores. And then you go through the list, and you see lots of LPs, which are limited partnerships, which are structured to pay out cash. So that would make a lot of sense to see those. You also see some investment corporations that might have missed our process, like Artisan Partners, right? More LPs. AT&T. My guess is you'll see Verizon on this list too, or maybe just below 7%. And then there's companies with negative net income, such as Chimera Investment Corp, or Carl Icahn Enterprises, or MFA Financial. You do see a REIT, you do see a mortgage capital company. Crestwood Energy Partners is in the, it's a midstream LP. And you see B. Riley, which I believe was profitable when they paid their dividends, but is recently less profitable, and the share price has dropped a lot. And so you see how that can work as well. Just a few things to remember. Past dividends is not a guarantee of future dividends. and that there's some certain conditions around money-losing companies that pay dividends, and then finally how we calculate them. The final thing is just a lesson that we learned the hard way. Dividend stocks go down when interest rates go up, all things being equal, especially if the company doesn't earn more profit when interest rates go up. We had invested in one of those stocks thinking, oh, it's a lock, it's a 5% dividend. But when interest rates went up to 4.25%, the stock lost 10% of its value. And so it's not a panacea. It's not a sure thing. I want to thank you for watching. If you like this information, and let me show you how we calculate it. So out of the report, you'll see a list. And in fact, it's just what you would expect to see. There's Dorian, there's Albertsons, and it goes all the way down. In fact, this report actually shows you all the stocks with dividends of 5% or above. And then here's your money-losing companies. And again, the report shows 5% or more. There's Chimera that we talked about, Carl Icahn Enterprises, etc., Crestwood. So again, thank you for watching Top Dividend Stocks on our website, and you would receive this information daily if you buy our report. Thank you so much. Bye-bye.